Welcome back to the What's Your One More podcast. Today I'm joined with one of my standing co-hosts, Mr. Daniel Halverson with Bank of England. Thanks for being here today, Daniel.
Yeah, absolutely.
And we are honored to have a special guest with us today. Super excited. We have Chip White, the Director of Homebuyers Programs over at Florida Housing. And I got to tell you what, this is, if you're a mortgage lender, if you're a real estate agent, if you're a prospective home buyer, a first-time prospective home buyer, you are in for a treat today because we get to sit down with one of the guys that I consider one of the goats when it comes to this. And I'm so honored to have you on the show today. Chip, thanks for joining us today.
Thanks for having me, Quinn. Looking forward to talking with y'all for a little bit here.
Yeah, absolutely. And the thing about the housing programs, the Florida Downpayment Assistance programs, I've been in this game for about 22 years, and it's all the myths that you hear about this. And what I have seemed to find over the years are the myths are usually attached to just people that don't want to do the loans for whatever various reasons. And we'll get into that here in a minute. But I'm very excited about this. Daniel, I know you know this program inside and out, so this is going to be a great show with you here as well. So we'll just get right started to it here, and we'll start off. And Chip, I'm going to defer to you and then over to Daniel here. But what is Florida Housing Finance Corporation, and why does it exist for our audience? Can you set the tone for that?
Sure, Quinn. Florida Housing is a state housing agency. We were created by the legislature over 40 years ago, so we've been at this for a pretty good while now. Mm-hmm. Okay. And really our whole purpose for being is to be able to offer a range of affordable housing options to the citizens of Florida. We want to make, communities safe, affordable, good places to live, good places to work. And so that's what we're all about is housing.
Yeah, and I think it shows with all the down payment assistance. And Daniel, like I said, feel free to jump in here. But outside of loan offerings, are there any other functions that this serves outside of just the loan options itself?
Yeah, so outside of the purchase money mortgage, which you and I work in every day in my program, we also do a lot of multifamily work on the multifamily side of the shop. They're building affordable, and actually helping to assist and finance affordable units, multi-units, big apartment complexes, with emphasis being on affordability. So basically, if we're throwing our money in there, then we are actually going to have them set aside a certain number of affordable units. And that's how we can serve some of the really low, 50% AMI borrowers out there that, live paycheck to paycheck. They still have a nice, safe, affordable place to live. So we do that on the multifamily side. We have special needs programs. We get involved in the SHIP program. So yeah, we've got pretty much a hand in everything having to do with housing.
Yeah, and I think, Chip, I appreciate you giving that insight. For our audience, when we talk about affordability, we've talked a lot on the podcast about affordability. Mm-hmm. It's obviously a hot button in the real estate market right now, but the Florida Housing Agency, these folks are boots on the ground when it comes to affordable housing and actually doing things to make housing affordable. So I appreciate you touching on that, because I think a lot of our audience probably would think, okay, well, they just offer down payment assistance, but it also, it extends a good bit beyond that with some of the things that you guys do. But, one of the primary questions for the audience that I had was, how do you guys get the funding for the down payment assistance programs and really any of the other programs that you offer?
Yeah, really, it's three different sources when you look at it, Daniel. We'll get federal funding, of course, and HUD, people like that, give housing agencies money for the various projects and programs they run. So we have from the federal level. As you know, with Down Heroes, we just appropriated another $100 million from the Florida legislature. So we also get state funds as well. And then we'll use our own money for some programs. We'll have projects, pilot programs, but we'll put our own money into the deal. So basically, that's it, federal, state, and our own money.
Yeah, and you want to explain maybe how you get your own money? Because I always find this concept to be kind of rewarding, but also interesting as well as how you get your own money, because I think there's a misconception on that.
Okay. So generally in the real world that y'all live in out there, when you do a loan origination, you'll make a certain amount of profit on that loan. That list, you pay Daniel and, the processors and everything else and keep the lights on.
Right.
So we do a lot of the same thing on our side. It just really varies by product, but most of our products are very what I call skinny profits, particularly something like Hometown Heroes, which I keep coming back to. But we will take any monies that we make off these programs and also get some admin funds for some of the federal fund dollars that we administer. And that's really, we plow those back in the programs, create new programs, new products, and keep the lights on.
Yeah, and during COVID, let's say specifically 2020 and 2021, you refunded a lot of these programs because the loans that were originally, issued were paid off. And when they pay off, you get that money back as well. Is that correct?
Well, generally, you got to remember, we do like what you do too. We securitize these loans. Mm-hmm. So basically, we'll securitize. So, they're sold as Ginnie Mae and Fannie Mae securities. So when they're paid off, it goes back to the investors to pay them. So, they're giving us this money up front and they're being repaid with the sale of the first mortgage. Now, the down payment money does get recycled.
Right.
So, and most of our down payment, we'll give you cheap money for a long time, 30 years, 0%. So we're funding like
better.
We want it back sometime. And that's what keeps the programs funded. I think that's really what you were talking about a while ago is basically recycling the DPA funds.
That's correct.
That.
And Chip, on the Hometown Heroes topic, we've talked a little bit on the podcast here about the changes that are going to be effective in July, where that program will no longer have the occupational restrictions, and it'll be in turn opened up to basically anybody that works for a business with a Florida address. Is that correct?
Yeah, that's correct. And when we have our lender and realtor trainings, we really need to define that better. I've already got a lot of questions. Do they have to be headquartered in Florida? And I say, absolutely not.
They just
have to have offices, boots on the ground, brick and mortar. And some of the examples I've used are Amazon fulfillment centers, Walmart, Publix, where right now we're restricted in hospitals to like nurses and CNAs and just a few other occupations. Everyone in the hospital is now going to be a hero. Same with schools, professors. So again, 98% of the people, as long as you're a first-time home buyer, should qualify for this program.
And do you anticipate with that change that Hometown Heroes will become kind of the flagship product offering in a way of what a large contingency of these first-time home buyers are going to be taking advantage of?
We hope so, Dan. Yeah, we hope so. The intent of, if you read the Live Local Act that was just passed that Hometown Heroes was funded out of, the intent of the legislature is to ever bring this program, which means to keep it continually running.
Huge.
So as long as we can feed it, we'll be good.
Yeah, no, that's a big deal. Now, is the name still going to be Hometown Heroes, or is it going to be identified as something different?
Still Hometown Heroes.
Okay. I think that's good for consistency purposes.
Yeah, absolutely. And Chip, you touched on something that I wanted to make mention of. I think there's a misconception in a lot of cases that the availability of the funding of these programs, that in some cases they may run out of funds. And maybe that there are certain products that maybe that is the case, but in my understanding, a lot of these programs are continuously funded, and I have never had an issue or a concern where we've seen a buyer not be able to close on a property because there was no funding available at that time. So can you just touch on, are there certain programs that are continuously funded, or are all of them continuously funded? What does that look like from your end?
Yeah, and really we offer, that's our model, is continuous funding. The bond program is set up that way. So, we'll issue bond issue after bond issue, always keeping that funded. And I started here in 2007. That's when we adopted that continuous funding model. TBA, as long as there's a TBA market, we'll always have TBA loans. Now, when we have a specialty program, something named specifically, and what comes to mind was the Hurricane Michael program, where you set aside a specific amount of DPA. So you run a program like that up to the amount of DPA you can issue, and that one will shut down. So, and look at Hometown Heroes.
Right.
That really, we rolled over our soldiers into this program, and we continue to run it. And again, our hope is that yes, we will continue to have a Hometown Heroes product, but we'll be looking for basically people to refi or sell the house to pay those funds back to us to again recycle back to new borrowers.
So the way that these are continuously funded is the assistance via the seconds, when those loans get paid off via refinance or sale, that goes back into the program, and it allows for funding to be continuously offered.
Exactly. That's exactly it.
Got it. And then to touch on your previous point with the Hurricane Michael funds, we had a program that was available in I think it was 5 counties, but Duval was one of them. Back probably 4 or 5, 6 years ago, the hardest hit fund. So there's these programs that kind of pop up, and I think that those were kind of obviously Hurricane Michael, based on the title, was primarily geared towards the housing markets that were impacted by Hurricane Michael. But the hardest hit fund, I think, was kind of a similar thing. Are these programs created, if there is an event like a hurricane or some type of a catastrophic event? Do these programs get created to help people get back into homes, or how do they go about creating those programs?
Yeah, from what I do here at Florida Housing, this again, the home ownership programs. Yes, need dictates us coming up with a program. The legislature may say, hey, we need to go help this area out, and direct us to do that. That was kind of the case with Hurricane Michael. But there's so much need out there. We can only concentrate on so many things at one time.
Yeah, and I just want to add that I thought I always have admired your program and how you guys have always met the needs of the Floridians at many different levels. And I think what Daniel's speaking to is exactly that, with the special resource programs you come up with. Hats off to you guys for that, because it's pretty impressive how you're very timely. And for an organization that, as you described, has thin margins and like a thin runway, you guys move pretty quickly when you need to.
And we said, really, we thank the legislature for that. We're a public-private partnership. We're not actually a state agency. And that was on purpose because they created us with the real estate market, the lending market being what it is. Y'all live and work this every day. You have to be nimble. You have to be quick.
Right.
You can't wait for the next session of next year in this business, or that we'd be sunk, wouldn't we? So they've really given us a lot of ability to be nimble this way, and trust us to do our job, and that we know what we're doing, and they're huge supporters of what we do.
Yeah.
That's an interesting point. I wasn't aware of the public-private partnership. And Chip, you said something a second ago. I wanted to come back to when you talked about bond programs versus TBA, and I think that folks that have been in the industry for a while, they associate all of the first-time homebuyer programs as "quote-unquote" bond loans. It kind of becomes the term that people use to describe these loans, but they're not all bond loans. Can you explain the difference between what a bond loan is and what a TBA loan is?
I'd love to, because I do this half the day to my loan officers and everything. God bless their little harsh. They think bond means down payment assistance. Okay. Yeah. As I told you, our funding sources earlier, I did not mention bond as one of them for down payment assistance, did I?
Correct. No, sir, you didn't.
I didn't hear that myself.
Basically, the bond program means that we have the ability to issue tax-exempt mortgage revenue bonds as a housing agency. In fact, we're working on an issue right now, probably $125, $150 million. We go to Wall Street, we sell these tax-exempt bonds to investors that are looking for that and tax-free income, which generally means we come out with a little bit lower interest rate than market rates. And then we basically use that to fund the first mortgage product. In the case of, since we're doing tax-exempt, guess who you think has a little bit of a hand in the rules? If you guess IRS, you're correct. Guess it. So the first-time homebuyer requirement, things like that, actually came from those rules. And with bond, we treat income a little bit differently. We look at the household income versus credit qualified income, and really don't want to get in the weeds too much, but it's a totally different animal. Whereas TBA is a daily price program. It's what y'all do every day. You basically underwrite a loan to FHA guidelines, Fannie Mae guidelines. We then had some DPA on the back end of it for assistance for down payment and closing costs, and we sell those loans on Wall Street. Okay, and again, those loans, we do a lot of things on the back end to protect and guard against the interest rate risk and things like that, because as an agency, we're very risk adverse.
Yeah, no, I'd agree with that.
Over the last 40 years. So, but that's the main difference is, TBA is a daily price. Once we sell a bond issue, sell all those bonds, we usually set that rate and hold that rate till that bond issue is fully originated. And then we go on to the next one.
And how long do those bond issues generally take before those funds are completely used?
Well, usually when we are doing a bond issue, we're almost fully originated. It's that kind of market. So that's why I say, so as soon as we do one, we're working on the next one. Okay?
Right. Wow.
Yeah, that makes sense.
And the reason has been in this rising rate environment, the bond program has been very attractive. That interest rate has lagged behind the TBA rate.
Yeah, that's exactly what I was getting ready to say. That price advantage on that is basically exasperating those funds before you even can issue them all up because of that lag you're describing there.
Yep. So
it's really nice to have that mix. Here, on our side is you have bond for a certain segment of borrowers. You have TBA for the other folks that maybe make more money, have higher, income limits, higher purchase price limits than their bond. So it's nice to have that mix to serve, the needs of Floridians, because we've got a bunch of us in the state now.
Absolutely. Well, I appreciate the insight there. I think that for the folks that are in the real estate and mortgage industry, it's important to make that distinction because, as you mentioned, the bond loans, because the IRS has their hand in it, they're maybe a little bit more restrictive, but interest rates can be a little more attractive. And then the TBA program really opens a lot of doors to offer this program to a much wider net. But, interest rates are generally maybe a little bit higher on those and in my experience. So I just wanted to touch base on that and also kind of drive the point home that this is not all bond programs. Bonds are not the sole source of how these programs are funded. So I think that's important for people to realize. And I guess you maybe kind of answered the next question that I had with that as a lead in, but how are the interest rates on these programs determined, just high level? We obviously don't have to get too far into weeds.
Sure.
With a bond issue, the IRS limits the amount of profits you can make. So basically, we're looking, when we do the bond issue, all costs are included. We can make a 1.125. That's it. So that's generally what we set that interest rate at. Okay. And, you couldn't keep your doors open at a 1.125 profit, could you, Quinn?
No, that wouldn't work real well.
Saying on the TBA side, we have a third-party hedger. Like I said, we're risk averse. So they'll actually give us a rate sheet every day. We'll choose from that rate sheet where we want that rate to be, how much profit we think we need in that particular product, and it ranges from next to nothing to a few points. So it really is product driven, if you would, on the TBA side. But like I said, that is done on a daily basis, whereas the bond issue I really didn't answer your question, that bond issue may be out there for 4 or 5 months. Okay.
And that's a big selling point as well, because when you're in a market like we've seen recently where there's a lot of rate volatility, those bond rates are very consistent, and I think that it's extremely helpful. There's nothing more frustrating for a buyer, especially when you're dealing with the first-time home buyers. Mm-hmm. You're somebody that's maybe a little bit more rate sensitive in terms of how much they can afford. So there's nothing more frustrating than pre-approving somebody. Maybe we see a jump in rates, and then they don't qualify for a TBA-style program, but these bond rates will generally hold pretty steady for months at a time. So it creates a lot of opportunity for us to be able to pre-approve a customer. And then if they come back in 60, 90 days, there's not this tremendous differential in rate that maybe pushes them out of qualifying. So,
well, the other thing I really like about this program is that the rates are set by your organization, Jeff. You guys set all the rates, and it's not like if they go to lender A, they're going to get a different rate than if they go to lender B. So it really comes down to the knowledge base of lender A or lender B, and obviously the service levels, because some lenders can underwrite these products in-house, some have to go out-of-house with them. And I think for a long time, this program kind of got a little bit of a bad rap just because of the service levels internally by the lenders, not necessarily from the Florida housing. And I think that was one of the major things that I discovered early on in the process was that, to your point earlier, you better know your shit on this product. You better know it, or you're going to step in a bunch of it smelling really bad in front of that buyer, because there's a lot of uh-ohs that happen with this product. And this isn't one you just wake up overnight. If you're an originator thinking about this, you're listening to it, I highly, highly recommend you get with a team that does this well, because you don't want to step into this product and just treat it like a standard conventional or an FHA product. There's a lot of, that's another reason this kind of got a bad rap, because people were doing a bad job servicing the loan.
But I like what you're saying there, Gwen, is, we set the rate terms of these products, not the lenders.
Right.
And I was speaking to a borrower yesterday, and first-time home buyer, great question. I mean, probably one of the smartest people I've talked to in 16 years, asking all the right questions. Really has done her homework. And she actually emailed me back yesterday. We talked last week. She said, well, maybe I'll call a few lenders to see, what their rates are. And I said, you don't have to do that. I said, all you need to do is, we do advertise loan officers on our website, as you know, and Daniel's on there. As you do, if you do 4 loans in 6 months, we think you know what you're doing. You better by 4 months, and of course, you've done a lot more than 4.
Right.
Okay. So if you go there, someone knows what they're doing. You just pick one that sounds good.
Right.
Call them, talk to them, interview them for that matter. See if you connect or not. So that was a great thing about we set the playing field, not our lenders.
And Chip, on the note of lenders, is there a process that you guys use to determine what lenders are eligible? What are the qualifications? Are there specific requirements that a lender has to meet to be able to offer these programs?
Good question.
That's a great question, and yes, we do. It really starts with our servicer. Our servicer, who's Lakeview now, we had U.S. Bank for a couple of decades. They really do what I call the heavy lifting. They do the financial background check, make sure that you meet the minimum requirements of the agencies, the GSEs, your net worths are there. All they do all that to make sure that if we ever see a great recession again, which we pray we never do, that you'll still be here when we come out the other side. From our standpoint, we want really a brick and mortar location in the state of Florida. Okay. We've made an exception here and there, but primarily the 260 plus lenders, you've got an office here. You've got that office you're sitting in Jacksonville. Now I'm old school, guys, and I'm just old too. My theory has always been we do this by phone now. We do it by smartphones, and then nobody sees anyone anymore. But my case has always been, if you really step in it, like Quinn said a while ago, and really mess one up, I want them to be able to come to the office and scream at you in person. And then if you're in California, they can't do that effectively.
You're right.
So that's been our big thing, is you're here, boots on the ground. You are a Floridian serving the citizens of Florida.
Yeah, no, I love that. And that might answer this next portion that I want to throw in there. But for the longest time, it was a requirement. You had to have operations in the state of Florida to do this program. And you recently, maybe not you, but the organization recently made an adaptation to that. Can you speak to why you did that? Especially considering how complex these products are, and brought in a selective group that you, quite frankly, for a long time just didn't allow to do it.
And when Joe, you talk about third-party originators, right?
Yeah, TPOs, yes, sir.
Okay. So, and actually, we did that back before the Great Recession. We allowed TPO business. U.S. Bank allowed it. But after we came out the other side of the Great Recession, just a good time was had by all. They just stopped that business. They quit supporting third-party originators as we kind of crawled our way back to people rebuilding equity in their homes and things like that. So we stayed away from that for almost 15 years.
Yeah, a long time.
And honestly, we just gotten so many calls from so many people, both borrowers, both brokers, as to why can't we have that equal footing? We're here, we're Floridians, we're probably serving a different customer than your bank lenders and some of the lenders that you have now. And honestly, the decision was made just to maybe reach more borrowers quickly.
Yeah.
Okay.
Have you found, and I'm going to put you on the spot here, has that been a little bit of a tough adjustment period for some of those TPOs coming in?
Not really. Right now, we've only got a handful.
Okay. Oh, so you don't have that many participating.
I know, maybe 5.
Five in the whole state participating. Yeah. That answers my question right there. So you got 5 TPOs slash brokers really, participating.
Well, I do. There's only one that's really killing it. Okay?
Yeah, exactly. Yeah. Well, I know. Yeah. If you want to clarify, we know exactly who it is. But I think that, from a perspective of doing this for a long time, one of the things that I've admired about this program is you said it right there. You had a lady call you, and I've heard you tell stories before of talking to homeowners. There's not many lenders, much less a director of home buyer programs, that's talking to the front line, that's in the line of fire, that's dealing with questions, complaints, concerns. And man, hats off to you for doing that. I know a lot of branch managers that won't even do that, much less the director of home buyers programs. And man, I think that's what's special about you, because you've been on so many different facets of the loan program that you understand that. And I've always heard you when you've come by our office, or you've come to talk to us, you were very front line. You're very, very front line, and I commend you for that, because you're very hands-on. There's just not a lot of people doing that in the business right now.
It's funny. So I sit here at the office. Every time my phone rings, I'll answer it. So will Cindy Smith, so will Mark Pease, so will Matthew Sanders. That's us.
Yeah.
That's our home buyer program right there. 4 people for the state of Florida running this program. I better talk to people from there. I've got people to talk to. Well, we pride ourselves on that. When y'all will call me or email and say, I hate to bother you. I go, you're not bothering me. This is it's a partnership.
That's right.
I'm here to support you. You're out there supporting our program. You have a question. We're the material experts. Ask us.
Yeah, no, I think that's great. And, just kind of back up here for just 1 second. Why is it other states? Like, clearly, I think your program leads other states. I think other states follow your homebuyer programs. They really look to you guys for guidance, and I'm not sure if you're aware of that. I'm sure you are. But when we talk to other people around the country, they don't have what we have right here. And you guys are leading edge. Your program leaders leading edge in this, and the amount of money and the amount of programs and the different variants of people that can apply for these is really off the chart when you look at other states. Now, are you aware of that? Are you familiar with what I'm talking about?
Well, the thing is, every state will have a housing finance agency. We've from way back when we've all done bond loans. So, we've kind of mimicked each other and what works for you, what doesn't work. But then over the years, we've evolved in TBA programs, specialty programs. There's some other great state programs out there, been out there longer than we have.
Right.
But again, not every state has 21, 22 million people in it that we're trying to serve either. And growing every day, right?
Well, that was the question I was going to ask. What do you attribute this dynamic, robust loan program portfolio that we have here with just completely amazing terms for our Floridians that other states haven't gotten to that level yet?
Honestly, for these programs, Quentin, it comes down to one thing: down payment assistance.
Gotcha.
And the amount of assistance that you give.
Yep.
That's, ever since I started running this program years ago, that's been the driving force. If you might be able to offer a better interest rate one day on an in-house product. And you do it every day, thank God. That's why you keep your lights on. That's why you keep guys like this over here, on the payroll. It's just interesting, how it's grown. And it continues to grow. Yeah. It continues to evolve every day.
No, I agree with that. 100%.
About specialty products earlier, that's what we do. That's what we know.
Chip, you mentioned the SHIP program earlier. I think one of the things that we find a lot is both real estate professionals and buyers alike. Oftentimes they get confused by how much is out there. There's a lot to know. There are county-specific programs. There are these other kind of spin-off incentives that we'll see from time to time. How does what you do intertwine with, or does it intertwine at all with the SHIP program or, some of these county-specific programs?
And SHIP is State Housing Initiative Partnerships. That's what it stands for. And I think we may have talked earlier, or maybe before we even started, about either state programs or local programs. And why is that? Well, we try to serve the needs of the entire state. So we use a shotgun approach. People like SHIP are there on the ground, boots on the ground. They know what's needed in their community right now, whether it be from disaster recovery, which they do, which that's really one of their primary functions when there is a disaster, to, like you said, down payment assistance. They do some multifamily. And at last count, when I was on the SHIP review committee here, which we do review their LHAPs, local housing assistance plans, every 3 years, there were 119 of those agencies.
Wow.
That received Sadowski Sadowski funds. And realtors, if you're watching this, y'all contributed this money, okay? This is a self-taxing pool of money back in, I think, 1992. That was created just to fund affordable housing. So y'all were at the forefront of financing affordable housing. So when you go to talk to SHIP agencies and you need money, you need information, you're the reason they're there. So hopefully they'll be helpful to you, and they generally are. And from our standpoint, where I get involved is when there is down payment assistance. A lot of times their assistance is more than we'll offer. Most of them will let lender layer that with our assistance.
Interesting.
Particularly in the case where, real quick, there was a disabled mother and daughter down in West Palm. the owner of the condo was going to sell the condo, and they're going to be forced to move out. And these are very low-income folks. But we were able to use our assistance. They got $65,000 from Palm Beach County at 0% money.
Wow.
And they were able to stay put and have a roof over their heads. So that's where agencies like SHIP come in. They really fill the gap. They know the needs of their communities, and they form their programs to do that. And what is the highest need here, which is going to be different in Leon County than Miami-Dade County.
Correct.
Okay?
Yeah.
So just to clarify, you guys obviously maybe work in conjunction sometimes, but those programs in a lot of ways are still separate from what you do on a daily basis.
Yeah, and I kind of left the question slide off the table there. I apologize.
No, it was great. Great answer.
Money comes through us. We distribute the funds to the SHIP agencies. Like I said, we do oversee them to make sure they live up to the statutory requirements of those plans and of the statutes that govern them. But other than that, they set up their own programs. They self-govern. Like I said, they meet the needs of their community. We really don't have any input in that, nor do we want to. We've got our hands full in what we do every day.
Yeah, I'd say so.
Sounds like it.
Yeah.
I'd like to know how many more applications from lenders you've gotten since the Hometown Heroes program was announced.
Well, I kept asking to shut it off, but they won't let me.
Understood. No, I mean, hey, we'll...
Something about lenders earlier. One thing we started a couple of years ago, which this is nothing, but we say if you don't deliver 4 loans a year as a lender, we're going to terminate you.
Good for you.
Because you know, and Quinn and I have had this conversation in the past, people will say, we offer bond programs, and they hang it up, basically hang their shingle out. Bond programs given, and they don't.
Right, they don't do it. Yeah.
It's bait and switch or something worse. So we do have a minimum production with 4. If you can't do 4 loans as an institution, you're wasting your time and ours too.
Correct.
Okay? But to answer your question, we've probably had over 100 lenders or more. I'm trying to terminate them as fast as they,
Well, Chip, we appreciate that.
Over here.
We appreciate that greatly because, my biggest thing with having so many lenders, especially new lenders in the pot, when they reserve the funds, it takes down funds that lenders that have been doing this for some time could issue. Right. And that's what we don't want. So I appreciate you monitoring that and making sure that doesn't happen at a rapid rate.
Yeah. Again, we're here for the benefit of the borrowers. This is in Florida.
Yep, absolutely.
We do this for a business, but that's the end product, which y'all get to see more than I do. I get to see a lot of numbers. Y'all get, every now and then I'll get the calls from the first-time home buyers, or I get success stories from y'all about this person, that otherwise might have been homeless even. And those are the stories we love to hear.
Yeah, that's fantastic.
Well, Chip, do you have anything else, for our audience, realtors or lenders, people in the real estate community alike? Is there anything coming down the pipeline in your world that's worthy of note, or anything in particular that you want to make mention of here while we got you?
I mean, really, the product du jour, what everyone's focused on right now, as you know, are the changes coming down Heroes. The main thing being removing the occupational requirements, where we have right now the first pot of money was targeted maybe 104, 105 occupations, very specific, very tight focus. But now we'll be able to go back, and I hated to get a phone call from the hospital employee that's not a nurse, that's not a CNA. They're a surgical tech. They do some other critical role in the hospital and say, sorry, we couldn't help you. Now the changes are going to help all of those things. Y'all are going to help all these people, and that's the most exciting thing. And again, just goes at what I was saying earlier, how we're always trying to change, evolve, be creative. And, what we did yesterday may not be as good as what we could do today. So let's do better today. And let's keep growing from there and learning from our past experiences. So that's really it. Just keep growing, keep lenders like you out there. Y'all are, always one of our top lenders, if not in top 10, top 5. Salute our soldiers. Y'all killed it. Y'all did more VA loans than any other lender in the state. So again, y'all make these programs successful. Not me, not my staff. Y'all do all the heavy lifting.
Well, man, we appreciate that a lot, and definitely means a lot to be partnered up with you. And Chip, I will say this, kind of going back to from a lender's aspect, you know, when you're dealing with a bank or a lender, these are truly CRA loans. These are dubbed as community reinvestment acts, where you're actually reinvesting back into the community. Because as you mentioned earlier, these are not profit makers. You're not going to build a book of business on this, but what you are going to build is a lot of goodwill in affordable housing. And, you know, there's a lot to be said in our business when you can do that and reinvest back into the community that you live in and participate in. So, you know, I thank you for all that you're doing. More importantly, man, thanks for joining us on this show today. I really appreciate you taking time to be with us and answer all of our questions. And Daniel, thanks for being on here as well. And Chip, man, keep doing the great things you're doing. And I value you as a business partner and as a friend. So thank you again for being on the show today.
Hey, it's a pleasure. Thanks for inviting me. When I get out of this office, when I don't have to answer the phone all day, I'll come over and see y'all in person soon. Okay?
Man, we're looking forward to that. Anytime,
man.
Anytime, my friend.
Okay.
All right, buddy.
Y'all stay safe out
Yes,
there,
sir.
okay?
Do the same. Thank you.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into it, yeah.